Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we've got a big week ahead of us as we start the first week of February. Of course, we have unemployment coming out on Friday. I'll go through details here in a minute, but there's earnings. There's all types of economics coming out this week that we're going to have to pay attention to. Now, if we look back on last week, we saw a sharp decline. We had basically 5 days in a row off the highs, and now we're looking at a pattern that I will be discussing in the technical section tonight, where we're likely to get the 5 days down, which we've already completed, 3 days up, and then maybe another 5 day down, but I'll go through all those details here in a minute. We're continuing to see a lot of things go on with our database on the short end of the market, but on the intermediate, we're still managing to maintain some pretty bullish configuration. But as we look forward to this week, let's just go through some of the details we have to look at. On the earnings front, on Monday is pretty light. There's nothing real substantial coming out. But Tuesday, we've got Amazon, Google, Baba, Pfizer. The list goes on and on. Tuesday's a huge day, probably the biggest day that we have. And then on Wednesday, we have a decent day with some pretty big names. But Thursday is the next big day that we'll be paying attention, especially to earnings. A lot of pharma, some other elements that are coming out. So that's going to be a big day. Friday's pretty much a non-event. But as we look at the economics coming out, other than we have ADP coming out on Wednesday, which is expected to show about a 40,000 new jobs come into play. And then, of course, we have our typical unemployment claims and the continuing claims. Unemployment claims are expected to climb 825, and continuing claims came in at 4.7 million. I'm expecting to see that continue to decline as the economy is starting to flatten out. And that's one of the big elements we're going to start to see come into play here, is that the economy is slowing down. As we look at market sentiment, it turned very south last week because of all the things around GameStop and some of the other short squeezes going on. I'm not going to discuss that tonight. There's plenty of people out there talking about that. And I will go through some elements tonight that I think are important. I know silver's in play, and I'll cover silver tonight. I usually don't cover that, but I will cover that because there's some interesting things going on in that market. But as we go through this week, it's going to be very dynamic. I expect the volatility to be up pretty high, and the configuration is likely to be very sloppy, but I do see at least the beginning part of the week trading up. And we'll see as we come into Friday, I think the unemployment numbers might have a really big surprise, and not a good one. As I've been discussing for the past several months, I expect the economy start to slow down. Now, when it starts to show that all of the jobs that have been destroyed recently come into play, that may not be until February, but there's a lot of jobs off the plate. So before you trolls actually come out at me and tell me about this is replacing the old fossil fuel jobs for the electric jobs, well, the electric jobs don't exist right now. And if you're unemployed, you're unemployed. And that has everything to do with economic output. So this is going to be an important period of time. I suspect this is going to play out into March, maybe April. There's just the market sentiment. I saw so many people out there bearish on the markets. It's almost obvious that we have to rally from these levels. In fact, overnight, we saw a substantial amount of weakness in the futures. They traded down to the 656 level, rallied 62 handles, and have actually moved back above 3,700, around 3,712. But let's go ahead and take a look at the charts, see how this week is setting up. As we begin with the WaveTech Database review, I want to point out that we did not see much of a rotation at all in the intermediate models. Now, we had about 660 new buy signals and we had 400 sell signals, so we actually had a slightly positive rotation. We've now moved the bullish percent to 81.34%, and the average duration is typically 201 days on the intermediate database, and we're currently at 74, representing about a 37% of the duration has been realized. When we look at the current average profit right now on these symbols, we're looking at 19.92, or about 64% of the returns have been yielded. And what we saw happen on the daily database, and I'll go through here in a minute, was we saw that the percent realized of the profits got to 90%, and we saw a rollover. So we still have about 30% to go on the intermediates. So I'll be watching that metric very closely as we come into this end of this cycle, which is likely another 8 to 12 weeks before we'll get to that point. We'll just have to watch these metrics very closely as we go through this. As we look at the daily models, they have a much different profile. We saw almost 2,700 more sell signals, only about 130 buy signals. We've now dropped the percent bullish down to 27.52%. And if you recall, a couple of days ago, I told you the metrics that we'll be watching on the daily will be 28% and then 22%. In the previous decline, going back to June 9th, we saw this thing go all the way to 8% on the short-term database. So everything that we're seeing in these markets anymore tend to go through the extremes than the norm. And this has been the case since we rolled over last year. The rallies and any sell-offs that we've seen during the last year have actually exceeded all the average metrics. So we're looking for this thing to hold somewhere here at 28, maybe 22%. And this will be the metrics that we'll watch going forward over the next several days. As I cover the S&P 500, we're looking at the futures. They're currently up 1450 at 37.19, and we're trading up about 0.39 on the evening. Now, we came in sharply lower and traded down to 36.56. So now we have actually rallied about 68 handles overnight, and we're seeing a reversal pattern form. As I mentioned in the opening comments, what I'm expecting to see is at least a 3-day recovery rally. We're going to trade back into these moving averages, and the first key average we're going to challenge will be the 37.36 level, which is also R1 on the daily S&P. So we could see that challenged early in the morning. Break above that will set the tone for moving up toward the R2 number at 37.65. I think we'll probably stall around 37.33, but we'll see how this thing plays out overnight. But as we're looking at the downside in this market, we came down to just about an S2 overnight at 36.45.50. As usual, the tail is being told on the weekly charts. We did just come almost to the S2 on the weekly at 36.42 with an intraday low 36.56, and now the R1 is 37.35, so that lines up with the daily numbers, and then R2 is 37.68. So we're likely to see an R2 S2 week this week, and if we do manage to close back above the 10-period moving average, which currently still has a PPM1 at 0.25, it's still positive in trend mode, there's going to be somewhat of a magnet for that level to hold as we get up to that level. Let's take a look at the SPX so we can get a better view from a cash viewpoint on what's going on here. As we go to the daily chart, you'll see that we actually got an STX buy signal, which suggests we're going to see the market move back up for at least 1 to 2 days. And this actually goes into that 3-day pattern. So I'm looking at 5 days down from the last high. There was 1 day in the middle that was up, but the pattern is a 5-bar pattern, and then we should see 3 up and possibility of another 5 down, and I'll update that when we get into Wednesday. And I also mentioned in the opening comments that I thought if there's going to be a surprise this week, it'll probably be on the unemployment numbers, maybe starting with the claims and then rolling into the employment report on Friday, as far as the fundamental news out there that could affect the markets. But as we look at the weekly chart on the SPX, we also saw an STX buy. STX was 37.35 that closed at 37.14. So that suggests that we could get as many as 2 weeks of sideways movement, moving back into the range. As we look at the projected range for this week on the cash, we're looking again at 37.40, 37.69. So this is going to be, at least initially, where I think the resistance will set up around 37.40, 37.69. Most likely, the low that we'll see come in on Monday morning could be the low for the week, but that'll be determined by some of the action. I'll have a better ability which to update those patterns as we go through the week. As we look at the NASDAQ futures, they are now up 0.32, up 40 handles. They did trade down to 12,727, so we've rallied a little bit more than 200 points off of the low. So we're seeing a substantial rally and a reversal pattern. Now we're back above the 40-period moving average, and we're likely to challenge the 21-period moving average, which is currently at the 13,029. So look for the market to continue to move toward there, which is also which also suggests that we would go to an R1, which is 13,033. The low overnight has been 12,727, just below S1 on the futures for the NASDAQ. As we go over and look at the weekly configuration, we're seeing that we're back above the 10-week moving average, 12,832. Last trade, 12,955. The low tonight, 12,727. S1's 12,767. So we're probably seeing potentially the extreme on the downside for this week, and we could see the move back up towards an R2 number. And we did not get the STX buy signal on the NASDAQ, but we did get it on the S&P, which could drive the sentiment as we go over at least the next 3 days. And I'll be able to update this as we come into Wednesday's market. Next market that I'll cover is the silver market, and silver is up 6.65% overnight, and there is a lot of talk on the Reddit boards and some other places of a short squeeze on silver. Now, one of the things, if you look at the chart here, you'll see that we're trading above the RXT number 2847. So if we close the day there, then we're likely to see at least 1 to 2 days to the downside. Now, the short squeeze was maybe easier on a GME or AMC or some of these other stocks, but when you start to deal with commodities and you have producers on both sides of this market, you're not likely to see the same type of squeeze play that you're going to see in some of these smaller stocks. When you have the industrial demand in here, there's a different play here, and you have a lot of different types of institutional players that are not motivated by hedge funds and a speculative element. It's likely if we close above this 28.47 today, we'll see a 1 to 2 day retracement and trade back towards some of the numbers in the grid, which would put us back toward somewhere around 26.54, maybe 26.15 on the downside. We'll have to see how this thing plays out today. If there's any action here, I'll cover it again tomorrow night. The final market that I'll cover tonight is gold, and gold is trading higher as well. It's up $12.80, up 0.69 on the session at 1863. Now, some of the numbers that I've been discussing over the past several days is around 1880 to as high as 1920. So those numbers are still in play. If you notice, PPM1 is starting to accelerate. It's at a plus 0.16, not quite at trend level, but is actually accelerating, seeing it move sharply higher. So I've been talking about this bottoming pattern in gold for a couple of weeks. It's starting to come into play. As we go to the weekly chart, you'll see there's some substantial overhead resistance. 1884 is a key number. We have the ppm2 down 0.24, which is right at trend level, but we're seeing ppm1 cross to its first and second derivatives. And so this is telling us that there is at least a 60% probability to move above 1884 and move into some of the Fibonacci projections between the 1900 and 1920. This is going to be the upper end of this range. Now, if we do close above 1884, then look for that acceleration up to those numbers. The key numbers on the downside this week is 1837 S1. So I'm looking for a minimum of an S1, possibility of an R3 this week. We're trading just below an R2 right now at 1878, and this is the weekly market grid. So this configuration continues to be positive. We did see a couple cycles come in, both on the daily and the weekly. So we're seeing some cycles come in, and this thing is setting up a bottom, to say the least. Now, just commenting back on silver, if they are able to get a squeeze going on in silver, then this is going to pull gold up with it. I think everybody's going to play along with this pattern. But as we see this configuration unfold, it's still got about another week or two before we're going to start to see any type of real acceleration on the upside above the 1920 level. The expectation for this week is an S2, R2 extremes. That's 1817 to 1902. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.